Welcome everybody on YouTube.
Yes.
And welcome everyone arriving right now.
There we go. Hopefully that's recording successfully.
We'll give it about a minute and then we'll rip into it.
Yeah.
You'll see a lot of people arriving. It's looking good. Reubs, you want to bring up your slides?
Yeah, I just want to make sure it's recording properly first.
Cool. Yeah, I've got a pop-up saying it is. So we're
did you? Cool. I didn't.
Yeah.
Cool. All right. Good. That's good news.
On YouTube, we're recording. It's all go.
Okay.
People arriving.
And here's what we're here to see. How to interpret the profitability of your engagements. XPM Workshop.
Fantastic. So so Reubs is going to be delivering this workshop today. As usual, Reubs does the workshops and I do the shorter webinars on whatever I feel like each month, I suppose. But I think the key focus for today, as you can see, is the interpreting the profitability of your engagements. Reubs is going to be looking at XPM and also a bit of a touch on link reporting, how we can sort of streamline some of that reporting for you. We've had a special request to talk about outsourced services. So that's featured in this webinar as well. So obviously outsourced services, that's going to impact profitability. How do we capture those costs on jobs? Reubs will be covering all of that. So we've got a really good session lined up. So we appreciate everyone taking the time out of their busy days to come along and hear us talk about this stuff. We'll hand over to Reubs and get into it.
Fantastic. Thank you, Will. Welcome, everybody. I think we had 115 registrants in the end for this topic. So obviously a pretty popular topic. Everyone who has registered will be receiving a recording, and as well as some other resources. We've got some resources that we're going to be handing out at the end of this around direct cost calculator, overhead rate apportionment calculator, and a couple of things like that that you're going to find useful. But let's crack into it. Here's us 10 years ago, maybe. Agenda. Okay, agenda. So we're going to be covering how do we arrive at the profitability on our engagements, measuring and applying direct costs to your engagements, overhead rate apportionment, profit versus profit to date and how they might differ, and what is a good profit margin on an engagement, something we're all probably wondering, and when not to use profit as a measure of success on an engagement. So that's as advertised. Now this is a workshop, so we're going to be doing some work. If you haven't already, ensure that in a different screen or in a different browser, if you can, log into your XPM, and if you have link reporting, log into your link reporting, because we're going to have an opportunity to build some reports together and look at your real numbers with you, maybe. So yeah, let's move on. All right. Oh, there's an animation. That's okay. Arriving at profitability on an engagement. So this is the profit equation, something we're all familiar with. Revenue minus costs equals profit. If only it was that simple. Revenue in our practice is represented by our invoices. Our costs are many and varied. The most common is the time cost of our people's time. We also have disbursements such as Xero Subscriptions, filing fees, outsourced services that we might incur, and also an overhead rate apportionment, which is something we're going to cover a bit later, something we could consider adding into this equation. Provided you got all that, you will be able to arrive at either a gross profit and or a net profit. That's what we're going to be covering here today. An important part about all of this is that in order to achieve this at the job level, this must be complete. We can't just pick and choose what we put in and what we leave out. We need all of our invoices related to that engagement on that engagement, and the time that related to achieving that value also on that engagement. So that's an important one. We want to always be lining up our revenue and our time. Another important point that I'm often asked is around Xero Subscriptions in particular. If you have bundled your into your fee, into your invoices over here, a cost of or a Xero Subscription is covered within that. They're not paying, your customer's not paying it for themselves, or they're not paying separately for that via a different invoice perhaps. You must, or you should, in order to arrive at a reliable profit, is you need to have the cost of that Xero Subscription represented somewhere on that engagement. So we're going to be covering that today. Same with things like filing fees or any other disbursements you might incur, and outsourced services. So the outsourced services are related to achieving that revenue. Cool. So yeah. All right. How do we do it? Now, profitability on an engagement. I'm going to start at the top. So we can view our practices profitability in our Xero Blue. Run a P&L and you'll see that. But what we won't have in our Xero Blue will be, say, profitability by partner. Because although we have revenue by partner, or we may be able to use Xero tracking categories to identify revenue by partner, unless our unless our wages are a big lump, a big ball of wages, and that's not distributed by partner. It's very unlikely that's the case. So we need to be looking to our practice management system to be looking for anything below practice type profitability. So profitability by partner feeds into profitability by client group. The partner is responsible for a series of client relationships. Client groups are made up of clients or entities. Entities or have a bunch of engagements or a single engagement perhaps, and engagements have people and services. So we're talking at this engagement level here, but I just want to paint a picture of how that all builds up and breaks down.
It's a great diagram, Reubs.
Thank you. Should put it in our book, version 2. Cool. Now, arriving at profitability on an engagement, invoices. There are some cool and important rules around invoicing. They must be associated with an engagement, not a client. And that's probably the most common problem that people face when they're trying to arrive at profitability on a job or engagement, is that their invoices either are not syncing from their Xero Blue, or they're syncing but just to a client. And we'll have a look at that shortly, what that looks like. Unfortunately, Xero Blue and XPM, there's no like error message or alert or anywhere we can look that's that easy or standard that'll tell us, hey, these invoices have not synced successfully, or these invoices have not associated with the job properly. There's no way to do that, but I'm going to show you how we're going to do that. So that's a key one. We need our revenue to complete our profit equation. Invoices on ad hoc jobs are of no use to you. This is another common one. Unfortunately, there's a button in the Xero settings in your XPM. I'll show you where it is actually. We've got time. Under business and settings. If you click along with me, you'll be able to turn this off with me. Cool. Click on Xero.
Turn it on if you want to destroy all of your reporting.
Yeah. And at the bottom here, there's an option that says create an ad hoc job where no current job matches the Xero reference field. Sounds very innocuous, but basically what that means is you're going to end up with lots of random jobs created whenever Xero Blue can't find where to put an invoice. And what that leaves you with is a whole bunch of negative WIP sitting on these jobs that will never have any time on it. And when we're looking at profitability and looking at that profit equation, we always need to be lining up our invoicing with our time. So those jobs are going to look hugely profitable because there's no cost in them, but somewhere else there's a job that's missing out, and the people who worked on it and that engagement and that client and all the way up the ladder, that's going to look unprofitable. So make sure that is turned off. Cool. If you have them, so even once you turn that off, you will still have some ad hoc jobs floating around your XPM. You want to slowly be closing those out. And ideally, like in a perfect world, we want to be moving that invoice to the job that it should be on. That would be the best possible approach. And if you need some help with that or want to know how to easiest do that, hit us up after this. It's a bit of a long-winded conversation. So we'll cover that later. But as an idea, we want to be getting rid of those. Cool. We must always be lining up our revenue at our time. If that's the only thing you remember from today, then we're winning. Cool. That's invoicing. Pretty simple. That's the easy part of the equation. The costs are where it gets a bit more complex, I suppose. We have our time cost. That is the direct cost of our people's time. We measure that on a per hour basis, and we ran a whole another webinar around why and how we do that a couple of weeks ago when we arrive at like ROI and things like this. We don't just put in like a lump salary, because that's not going to help us when we need to calculate down to that engagement level. A lump salary might help at the practice level, awesome. But when we look at client and group and partner and all those other layers, we need it down to a per hour level. So we need a direct cost per hour calculated or arrived at some way. And I will show you how we're going to do that. Cool. Timesheets are required. That's obviously an essential. Time is the biggest driver of our cost in professional services, accounting in particular. Without time, there's no job profitability. I had someone once upon a time try to tell me that they could measure their job successes without doing timesheets. And I said, how? And they said, ratios, bro. Ratios. Good luck with those ratios, bro. I don't know what those ratios are, man. But yeah, those people are dreaming. Without capturing time, people will not be measuring job profitability. They won't be measuring client profitability. They won't be measuring anything below the practice level, as we saw from our diagram earlier. Cool. And then this is the opposite side of the problem. Ad hoc time jobs also can be created for time only. People have the habit, sometimes it's called ad hoc, sometimes it's called general queries or like something random, that people just have dumped time into an ad hoc bucket, hoping that it's going to be invoiced one day and leave that problem to somebody else. That's not good, because invariably what happens is we end up with this job that accumulates lots of time over time and never has any revenue associated with it. I think the hope is that people move that time at some point, or some other poor person will do that for them. Same as we don't want a job just with an invoice on it. We don't want jobs floating around just with time. Accumulating time for no reason. So if you ever see anything like that, you want to be kind of shutting that down.
Yeah, I've seen $400,000 of WIP sitting on ad hoc jobs once, so it can accumulate over years and blow out. So, yeah.
Yep. So that time belongs somewhere. That's the key part. Right? That's a cost to our job. We're just not measuring it, and so those jobs are going to look wildly profitable because all the time is somewhere else. Those clients are going to look wildly profitable because all that time is somewhere else. So it all feeds up the chain. Yeah. Cool. Time cost calculator. I'm going to show you this right now. And I'll send this to you, or everyone who registers and everyone on this webinar. So let me just share my screen here. Cool. All right. Let me just make that a bit bigger for you. Can you see my screen, Will?
Yes, I can. Yep, looking good,
cool.
Man.
Great. So we're going to send you a copy of this, and it's not gospel. You're probably better off to arrive at this yourself. This is just a starting point for you. I think the thought process of constructing and arriving at a direct cost per hour per person is important to go through yourself, in my opinion. Don't just take our formulas and take our spreadsheet and go and run with them. I would encourage you to actually maybe even construct this yourself. But to give you the idea, what we're doing here is we're looking at the number of weeks in the year, which for all of us is roughly the same, 52. Depending on what country you're in, we have annual leave of 4 weeks for our people, or there's 4 weeks roughly of that working year where it's annual leave. We have 2 weeks of sick leave, maybe 1. Public holidays, there's about 10 days, I think, in Australia and New Zealand. So there's roughly 44 working weeks in a year, rough maths. Now we've got our people. There's everyone who works for us, and for some of you that might be quite long. And what we want to put in here is a bit of what we pay them per year, and including any other benefits like super and any other remuneration they may receive. Whatever's in their contract, put that in that box there. Cool. And then also in that same contract, we should have an expectation around how long that person works for us. So as we can see here, we've got, that might be 40, might be 37.5 if we're excluding lunch from that. It might be 20 if they're part-time, but you want to put in how long do we expect these people to be at work? Then all we're doing is we're taking the total number of hours per week by the working weeks, dividing the wages by the number of working hours to arrive at a direct cost per hour. That's the rough idea. You can do lots of weird and wonderful formulas to arrive at something different, or maybe arrive at a different way, but that's the principle. And any number is better than no number. Most practices we meet, they either put a big 0 in their direct cost rates in XPM, or they use the same as the billable rate. And so that means that all your people are free, or all your people make no money for you. And neither of those things are very good when we're trying to arrive at profitability by engagement or job. So yeah, this is a rough idea, and I'm going to send you this template. You guys can fill it out or take it and run, modify it from there.
Reubs, just to clarify any confusion there. So that's not a pro rata annual wage. So Corin there is getting paid $80,000 for 20 hours. That's not
correct.
Her full annual salary would be 160, but we're showing
if it was annualized. Yes.
Yeah.
Good question.
Just because she was at the top of the list there, I thought I'd clarify any confusion there.
Yeah, thank you. Yep, that's we're just going to put in the what we actually pay this person. Yep, and then for what? Yeah, you could modify this if it was easy for you to think about that. You could just make that 37.5 for everybody, and then make this annualized. That would achieve the same effect. Yep. So whatever's easier for you, but the thought process is what's important. You'll notice that we exclude leave from this equation. What that essentially does is it kind of pluses up our direct cost per hour to cover the time where we're not at work. This is because leave is excluded from. It's obviously leave doesn't actually affect us at the engagement level, because we're putting it to a leave job, which is incurring cost. So we kind of want to account for it in some way, and this is probably the easiest way to do it. We're essentially giving a little extra cost of leave to every hour that gets worked on a job. So that's why that's excluded, to make that a little bit bigger. So coming back to that's our time cost calculator, and what do we do with that? Let's have a look. Somewhere in our XPM here, not that way, not that way, this way. Back to our XPM. If you want to click along with me, we're going to business and settings. We're going to go to staff. You're going to take that number from that spreadsheet, and you're going to click into Ruben here, or the person, and this is where you're going to put it, base rate. So if Ruben was in this list, it would be $90.91. Coming back that way. There we go. $90.91. There's a direct cost, or our best guess at a direct cost of an hour of Ruben's time. So that's whenever Ruben does a timesheet, two values will be applied. This will be the direct cost, and this will be the billable value, the rate that gets eaten away at the budget for that job. Sweet. So, important note about this is that for a lot of you, when you log in, you may find a 0 there, or you may find something like that. I see that quite a lot. What's annoying about XPM is that this number cannot be retrospectively updated. So if you apply this rate today, and I scroll down and click save, this will only affect today's timesheets for Ruben forward. That's not going to help us when we're looking backward at our historical jobs, historical clients, current clients, going all the way up the chain. So fortunately, we have another method for you. For those of you who are using link reporting, let me just sign on in. So if you're not using link reporting, definitely put that number in. It's the best you're going to get. If you are using link reporting, there's an area in here called base rate mapping under settings, base rates. And this base rate doesn't sync upward to XPM. It's purely for the purposes of the calculations that occur in link reporting. So for Ruben, or we'll click on Aaron, click on the eyeball. And what's cool about this one is that it can be retrospectively updated. And you can have different base rates for different years. So as you can see, we've got a bit of a grid, all the years that Aaron's been working for us. We can say that Aaron started in 2018, and his base rate back then was $30 an hour. We can update that to be 33 on this date. Then you've got a pay rise over here. And then, yeah, we're currently in 2022, so it's the same. We click save, and when we rerun our calculations, your historical jobs, for as long as you've been using XPM, all of your clients, going all the way up the chain, will have an updated cost rate to them. So instantly, you'll get some good data. Cool. So I'd also want to note that you want to be doing this, if you don't worry too much about looking back in time at what people were paid for particular years, I wouldn't get too hung up on that. If in doubt, put in when they started working for you, even if you arrived at one number, like that $90 number, put that in at the start, click the green arrow and click save. That would be, 80% of what you need, or about almost as good, rather than spending a lot of time looking back through old pay rates and stuff. Another important note in this, or something to consider, is depending on your how far back do you want to look for your client profitability, job profitability, we actually want to do all current and past staff members in here. Because what we don't want is Bill here, who no longer works for us now. I actually do want to put in a historical cost rate for him, because jobs that Bill worked on, I don't want them to be looking amazing, because he had a cost back when he worked for us as well. So yeah, that's how we go about updating our base rates in link reporting.
Cool. Rubes, just let you know, we have a couple of questions here that I'm not going to answer right now in the chat, because there's some really good conversation topics. So for those two questions, I wanted to wait to the end because I'd like to get Ruben's feedback on it as well. So I just want to give you guys a heads up.
That's it on time costs. Did I miss anything there, Will?
No, looks good, man.
Awesome. Moving on, disbursements. Xero Subscriptions. Now, there's a whole chapter in our book. I think a lot of people I saw on this webinar have purchased this book. Look at chapter 9. There's a whole chapter on Xero Subscriptions. It needed its own chapter. There are a lot of really different ways to manage Xero Subscriptions. The principle is the same, always be lining up our revenue and our time, but I'm just going to quickly take you through in your XPM what that looks like. So in a perfect world, I would recommend that we don't bundle our Xero Subscription revenue into our engagements. If we can avoid it, have that on a separate invoice if you can. A lot of people who have been using XPM for a longer period of time, or have been on those like fixed monthly fees for like early adopting practices, they have them bundled in. That was the way it was kind of done back then. And if you can start today, try to unbundle that Xero subscription from your services subscription if you can. It's just a pain when Xero prices go up, and it means it's a bit more onerous for you to record the cost. If you have a separate Xero invoice going out every day, your XPM probably doesn't care that much around what that costs you. Your Xero Blue does. You can just put all that to a subscription revenue, subscription cost account, and you get a good idea in your Xero Blue around making sure that we make money on that. But if you have it bundled into your services, we have to have the cost incurred on the job. The easiest way to do that, if you click into any job, is when we're setting up that job and our costs tab. This could be coming from Practice Ignition, but I'll just show you the XPM method. I've got a filing fee in there, that's right. We'll put in Xero Subscription, Business Edition Annual. I'm just going to put in one annual fee, and I'm going to click Save. So there's two values in there, actually. I should go back. That unit cost we're going to put in as the expected cost. We will make margin on these fees. So that might be 600. And then the unit price will be like the retail price of that fee. So we'll click save. Cool. Now, this is the important part. What that's done is that's added $720 to our work in progress, because disbursements are also part of our work in progress. And what you don't want is, if you've got, if you're paying Xero $10,000 a month, you don't want $120,000 plus margin added to your WIP all the time. You've just raised the water level of your entire practice all the time. You don't want that. So what we're going to do is we're going to untick this. And what that does is that this turns it from an actual cost into an estimated cost. So we know that we're expecting and we are incurring each month a actual cost for that, and that may change over time. But prior to closing this job out, what we want to do is we want to tick that box, do the WIP wash up, and then close the job in that order. That's important because these disbursements get the first bite of any write-on or write-off. What you don't want to do is not have this fee here at all. Wash the job up and then add it in, because all the people, they get all the revenue that kind of was for Xero attributed to them. They look amazing, and you have write-offs on your Xero, which you can go, oh, I don't mind about that, but it's making your people and your services look a lot better than they actually are. So we want to make sure that we're recognizing this as an actual cost based on what we actually incurred in the subscription fee just prior to closing the job out. You don't want to do it too early because it's going to spike the WIP up.
Yeah, just to really highlight the impact of not putting these Xero subscription costs on your jobs, if you are charging with this engagement, is that $600 cost there. If someone's base rate was $60 an hour, that is the same value as 10 hours of someone's time. So if you think about the impact of that, that's really big. So if you are billing your Xero subscriptions under that engagement, it's so important we put that in there to get true profitability on the job. Otherwise, we're going to be massively overstating our profit.
Cool. Fantastic. We do cover a couple of other methods in the book, including bulk importing each month your Xero subscriptions. Have a look in the book for that. Yeah, that's also another method, but this is kind of the simplest, easiest way for everyone to manage it. Yeah, all right, moving on. Xero subscriptions, filing fees. That's pretty easy. As we incur any direct disbursements, we just need to add that in. So any costs we incur, and same deal if they have a direct cost to you, or whether it's a fee that you charge, you want to be putting that value in. If it has a direct cost to you, and I would encourage you to add some margin of some sort, even if it's only 10 or 15%, I'd encourage you to put that in as well, and for the same reason. With that one, you could wait till the end of the year, do the untick thing. I think with these filing fees, you're better off just leaving it as an actual cost at the time you incur it. Cool. Outsourced services. Now, there are two popular methods that are used here. One is a fixed fee per return. So we cover it in a lot more depth in chapter 9 of our book, but this would provide you, say, a fixed fee per return. Someone's going to say, well, how many returns you're going to do? What kind of resource does that need? They're going to give you a fixed fee per return, and you're going to need to add that into this job. So if this was our job, and we're going to have somebody, an outsourced service company do this for us, or a big chunk of this for us, we should need to put in at the time of that job setup, or at the time we know we're going to outsource it, a cost for that. And that should be known in advance. Shouldn't really be a surprise. It's in a contract somewhere that someone has. So we need to put in something like outsourced services. Something like that. Cool. Now, there are, that should be visible. That's okay. Unit cost. This is direct cost to you. So this is what you're being charged by the outsourced service provider. Will and I discussed this for a long period of time around, do we add a margin onto this or not? And I see customers who use outsourced services go one of two ways. They either make that the same, so that way we essentially don't make margin on our outsourced services. What that does to your people and your services, it tends to inflate the performance of your people, because they get all the cream for the work that the outsourced service people are doing. And for some practices, that's what they want to see. They want to see that because we are using outsourced services, our people are more likely to achieve write-ups with their time. We make them more effective with their time. That's what they want to see. Other practices think differently. They think, I'm going to add a retail value, or they're going to apply a markup to this outsourced service of say $1,000. And what that happens with that $1,000 is that gets the first bite of any write-on or write-up. And that puts a bit more pressure on the people to perform, because what ends up happening in practices that use outsourced services that don't apply any margin to it is it gives your people a lot more fat. They can actually relax a bit more on the delivery of jobs and take their time a lot more because there's a lot more write-up to eat into. So some practices, they like that and they like to see that. Other practices think, no, I mean, I don't want them taking 12 hours on it. I know it can be done in 6. So I'd rather they did it in 6. And the way we achieve that is by applying a margin, like a default markup, onto this outsourced service fee of say $1,000 or something to that effect. And because that gets the first bite of the budget and the wash up, you can still have write-offs on these jobs, and the people will look or won't have inflated performance, basically. Yeah.
In terms of that margin, that's a really question you've got, is like Reubs has put on a 100% markup there. But that's an often the question we get as well. And what I generally say is, if you do decide, because obviously the two options, you put no markup on, higher write-ups for your team. If you do decide to put a markup on it, you want to probably align it with what your anticipated ROI is for your team. So if you're trying to get your billable team members to be working towards a 300% ROI, you'd probably put a 300% ROI on that, which would be what Reubs put in there. It's 1,500. That's your markup. If they're aiming at a 250% ROI, you'd go 250. But what's really important is understanding, once we pick a method, you really want to stick with that method. And that's because we don't want to have 0% over here, 200% here, 300% here, because we look at our reporting and we have no idea what's going on. So as long as you pick a method, stick with it, and then you can then interpret your reports with that markup in mind. It's so important we don't change.
When we say this is one you do want to identify as an estimate to start off with, like so. So that is what will update the budget on that job, so that people know, hey, this is a $5,000 engagement, but there's $1,750 here that's already kind of taken up. I've got what's left to deliver it. That's what we're communicating here, and why that's an estimate. For the same reason as we wouldn't tick that on for our Xero subscription, just before we wash up the job, we'd tick that up, which would inflate our WIP, and get the first bite of the wash up, do our wash up, archive the job. Cool.
Super important, that. Just one other point there, Reubs, is when you put on 250%, because there's a difference between an ROI and a percentage. So so if our cost was $500, if our ROI was 100%, it would also be $500. A 200% ROI would be $1,000. So just want to clarify that your markup and your ROI are different.
Yep. Fantastic.
Cool.
So that's fixed fee, and we often see that that's kind of normally coming out of countries like India. The other method is much simpler via countries like the Philippines or Vietnam. Those sorts of outsourced service providers, you get given a person with a name, you learn their name, their family, you know where they live, you know how to find them. Those people are doing a timesheet for you. And so with them, we want to be using this calculator, but their direct cost will be much lower because we're paying them a local wage for their country. So you're going to add them as a normal team member. They need to do a timesheet for you. If you're using outsourced services out of the Philippines, they need to be doing a timesheet for you. We can't just be receiving an invoice unless it's itemized by job, which no one's going to want to do for you. So rather than itemizing me an invoice by job, I need a timesheet because we need to capture the cost of that somehow. Yeah. Simple as that. If you have outsourced services and they're not doing timesheets for you, they need to start via this, if they're using this method. Cool. Sorry, any further questions on outsourced services, Will, before I move on?
Yeah, that actually was a good one here from Nikki. In regards to outsourced services, if you include the cost and the markup on it, does the write-off on the job go to outsourced cost first and the employee second? Because you mentioned it gets the first bite. So
gets the first bite. Yep.
It does. Yeah.
That's the answer. Yep.
Absolutely. So
and that's what we want.
Yeah.
So
the way the revenue is distributed on a job when you do a wash up. So let's say we've got all of our interim invoices, and when we do our wash up, we're allocating the interim invoices to our time and costs on the job. Now, yeah, the outsource, the costs get the first bite. So the full 1750 in that example gets allocated to that cost. Whatever's remaining gets allocated to all your team members. So if there's a write-off, the outsourced service is going to get none of that write-off. It's going to get all allocated across your team.
Yep.
Cool. And then we had another question up here from an anonymous attendee saying, from earlier saying that sounds good for wage staff. Though, is there a variable method, for example, with contractors? Because we're talking about base rates earlier. So hopefully that's answered the question. What Ruben has just covered there is for a contractor, we add them as a cost item rather than a timesheet, unless again, Rubes is really touching on it right here, whether they're doing timesheets or not.
Yep.
So if it's on a percentage of a job.
You don't want it in both places. So if you don't put a base rate in their timesheet and also enter the invoice against the job, don't do that. It has to be one or the other, not neither.
Yeah, we've got one more question. We'll clear the questions here. So Kanina has also asked, with the base rates, if you're using link reporting, would you just put them in link reporting, or would you put them in link reporting and in XPM?
I'll just put them in
link reporting overrides XPM.
Yeah, we don't actually override link reporting. It's just our reports are better.
Yeah, our reports use link reporting over XPM. What I'd probably say is, because Kanina was also concerned about staff being able to see other people's rates.
Security,
That's where I'd probably use the permissions to not show staff those rates. And also bear in mind that they are going to be inflated because of the leave and all those sorts of things, right? They are going to be overinflated. But what I'd say is I'd probably keep them in XPM as well as a backup. There could be one day that you don't use link reporting. You know, I hope that's never the case because we keep doing cool stuff. But yeah, just as a bit of a backup, if you ever were to use link reporting, I wouldn't remove them out of there.
Yeah, you know the weaknesses of it. It can't be retrospectively backdated. So yeah, and then security. If we click into anybody's name here, anybody with admin access to your XPM, which would be anyone with this tick box here, we'll be able to see those numbers. So you're going to be mindful of that. Sometimes people prefer to put that in link reporting only because they'd rather their administrators of XPM, which might be their invoicing people, for example, aren't able to see these numbers. And they kind of keep link reporting for like partner manager type, senior manager type level. Sweet. Overhead apportionment on this topic. Now, some practices, what we've just arrived at is gross profit per job. Some practices, probably 50% of the people I would deal with, want to measure a net profit per job. And the way they do that is by apportioning a value for overheads to each hour that is worked. And inside our calculator here, I've got it over here as sheet 2. I've kept it separate so we didn't confuse it ourselves. What we have is almost like an extra staff member. We have a value for annual overheads, excluding wages and salaries and any other direct costs that we're already capturing up here, of $200,000. And what we want to calculate is based on the sum of, we want to work out the total number of hours worked in a year, basically. This is the number of hours worked in a week, but we multiply it by 44, divide one number by the other, and you end up with a flat rate. Doesn't matter who you are, everybody in your business for an hour of their work is getting $25 added on top of that number. So if we were to insert that, make that, fix it like that, drag that down, it looks a bit like this. And that is what I guess a total cost would be for an hour of a person's time. What that ends up doing, we'll drag that all the way down, but see if that's working. No, that's all right. The drag's not liking it at the moment, but that's all right. You get the idea. What that does is when that person does a timesheet, it's turning our jobs into a net profit basis. So we're more likely to see losses on a job, which sounds terrible, but for some people that's actually better, and how they prefer to think about it. Yeah, and they just want to make sure that every job is making X margin, which we're going to come to in a moment. So that is how, when we'll provide this calculator to you, but that is a rough idea around how you might arrive at a flat rate per person per hour. There is no place in XPM to put that, and I wouldn't encourage you to build it into that number just because it can't be split out. But in your link reporting, for those of you using link reporting, we have an area in here called overhead rate mappings. And it can be updated each year because your overheads will change each year. But yeah, you should have a number around, an idea around what that is. My one was $25.22. And I'm going to apply that for the whole year and say, when we rerun our calculations, all the timesheets that are entered in that year will, in a separate entry, get applied an extra cost, basically. And you'll see that when we look at our job reporting. Any questions on that, Will?
Yeah, just want to quickly explain, Rubes, how those rates are used between a team report and a job report.
Yes. Yeah, I do. So mainly, overhead rates get applied to jobs only. Yeah, so it doesn't affect WIP. Costs aren't part of the WIP equation. Team and individual performance, overhead rates aren't applied. your team isn't in control of the overheads that are incurred in your business. So when we look at individual performance or team performance around a profitability basis, like how much money does a person make me, that will always be a gross profit. You will need to mentally subtract the cost of their desk and stuff, I suppose. But when we look at a job level, job to job, client to client, partner to partner, this is something we or practices do like to see an overhead rate applied to sometimes.
Yeah, it's generally because like with your ROI, if you move to a bigger office and your overheads increase, you wouldn't want an individual's ROI to drop.
Which is what would happen, yeah, if you were to
basis.
apply it there.
So, generally, team performance, we look at a direct cost basis. We look at the individual, but when we're looking at clients and that sort of level, we do want to have that overhead in there to see if we are making a profit and covering our overheads. So that's why link reporting gives the ability to split those two rates out.
Cool. Profit. Let's talk about profit. So you'll find two different terminologies used. One is profit and one is profit to date. They're important because they do communicate different things. Profit is ours. It's not changing. It's seen on completed jobs, which can be rolled up to, clients, groups, partners, etc. In order to work, we need to ensure that all parts of that profit equation are complete at the job level. So those invoicing, all those costs are captured. That will give us a gross profit and optionally a net profit. Let's look at an XPM example. Those of you using XPM, feel free to click along. Where did my XPM go? This way. Cool. I'm going to go to the report builder. I'm going to do this live. I didn't even rehearse this, but I'm sure it'll go well. Click along with me. Report builder. I'm going to go to new report, report type, and we're going to go to job. Select report layout. I'm going to go to table. Create. This will be recorded so you can follow along later. I'm going to call this job profit or profit on completed jobs report, something like that. In section 2, we're going to put in all the columns. These are going to be the columns of our report. There's some common ones we're going to want. The first one is client. That's a good one. Who am I doing the work for? Next one is we're going to want the job. And there's a good field in here you should know about called job summary. It's the job number and the job name together. And it's a link so you can click through to it, which becomes important later. We're going to do job summary. What are we doing for them? We're going to build up our profit equation now. So I'm going to put in actual cost. You'll notice there's 3 different parts to this. Actual cost, which is the total, it's called actual cost time, is the direct cost of the time in XPM world. There's actual cost, which is like the direct cost of your Xero subscription. And together they sum to actual cost. So if you want it broken out, do all 3. I'm just going to do one. I've missed the invoice value. We're going to do job invoiced. That's invoice value. Cool. Invoiced, actual cost. Then there's one in here called job profit down here. That's the difference between those 2 numbers. And optionally, there's a profit percentage. Like so. That's the basics. You can put in a few extras. There's lots of other fields in there you could consider, like manager might be a good one to put in there. Partner would be another good one to put in there. You could put in time in there as well, like total time that was incurred. That's the extent of the good ones. For the criteria, this is the important piece. I'm going to say job state. Oops. Sorry. Give me another go. Cool. We're going to be looking at job profit on completed jobs. So job state includes, and you're going to select anything that means finished. So basically 0 WIP, no further invoicing, no further time. So for me, that is this job state here and that job state there. Those are the jobs I can know that profit is mine. That's how that job went. Lastly, you're not going to want this for all time, especially you practices that have been using XPM for 12 years. We're going to want to bracket this somehow. At the job level, there are a limited range of dates. We could use invoiced date. I think it was date last invoiced as an option. Probably the best one.
Another one, Reubs, is job completed date's a good one, and then choose the.
That's probably the best one. Yep. So the date the job was completed. That is the time that we know that profit was ours.
In which case, you wouldn't need your job states there.
Yes, correct. Yep. Yeah. So yeah, you actually wouldn't need a job state because only jobs that have a completed date will feature in this report. So you can skip that first piece. When we're putting in dates into our report builder here, we want to kind of bracket it. So I'm going to say job completed date is on or after some beginning date. And I like to use a custom date range. Gives me flexibility. So I'm going to go, this is a demo account, so I don't know how much data is in here, but we'll have a look. Then I'm going to put in another completed date field, say job completed date is on or before. So this is my end date, another custom date range. And I'll make that today's date. There are other defaults you can put in. If you're going to run this monthly, for example, would be a good idea, but I'll leave it as a custom date range for now. Share that with anyone else in your practice you want to be able to access this. Where it says rows are grouped, I would select grouped. What that does is the top, whatever's at the top there, in this case, client, could be partner, could be manager. It will change depending on the kind of question you have. That becomes like a big heading. So it will subtotal everything underneath it, which is nice. And then lastly, I'm going to say staff can change the date. So if I'm sharing this with other partners, I don't really want them fiddling with it too much, but I do want them to allow them to edit the date. So let's hover over the blue triangle, click save and preview. That'll save my mean as report and show me what it looks like so I can go back and fiddle with it if I need to. Isn't that amazing? I might extend my date range. We'll see. Hopefully yours looks better than that. We obviously haven't completed any jobs in our demo account for ages. Let's have a look. Try that. A little bit better. Cool. 10,000 foot limited. This is our client. Here are our jobs, 2020, 2022. Where's 2021? Good question. But you have a profit value. And the awesome thing about this report is that provided all your time is in, disbursements in, invoices are there, that is a reliable profit figure for that engagement. And that is a reliable profit figure for that client for that period. And there's our margin, which we'll talk about in a little bit. But as a bare minimum, this is a good report to have up your sleeve. Anything you'd add to that, Will?
Not at the stage. We've got another couple of good questions that have come through, but I think we might cover those at the end.
Cool. Let's have a look at what that looks like in link reporting. It's a lot better. So sorry, yeah, we're going to be running a completed jobs report. Very similar. One of the annoying things about this is in order to drill into these numbers, I need to open the job. I need to look at the invoices. I need to look at the tasks. I need to look at the time. It's quite hard. You also notice there's not a lot of detail. Like if there was a job in here that didn't perform very well, it'd be quite hard for me to go and find out why. So what we would do instead, if I run this for, say, the last 12 months by client, just click show more. And then by jobs, this is a 2-layer report, 3-layer actually, but client job info, we'll just click run. Better to just let it do the talking. So if you're using link reporting, go and do this. Could be a big report, not too bad. All right, so very similar sorts of fields here, but there's actually more fields available in link reporting than what you'll get in your XPM, obviously. But one of the cool things about this is sort. So we might be interested in these jobs. Profit is the conversation today. So we're going to sort by profit. Depending if you have overhead rates apportioned, we could be talking either net profit or gross profit, but never both. It's always, if you've got overhead rates applied, make sure everyone knows this. And it's not causing confusion. So these are the jobs that we did not make a profit on. And the way that's arrived at is the same way as what's an XPM, invoice value minus total cost. So we can scroll through these and find out why we have not performed on these. Also, we can look through here and look at the profit that we did make on some of these clients or client groups. That's another cool thing link reporting can do. You won't find client groups available in your XPM in this particular report, which is annoying.
Do you want to expand, Reubs, and see how those levels look?
Yeah, so this is all nice. This is at the client level, but I want to know, okay, well, where and why did ICT Plumbing not make any money? Good question. We have one job for this client. I'll see if I can find an example that's got more than one. Spice and Lice, 4 jobs completed in that period for this client. We can see one particular job here. Actually, 2 of these jobs don't have invoices. Obviously, the data is not great. Hopefully, yours look normal. But this particular job here, that's what we invoiced, and that was the value of effort. That was the cost that was incurred in total time. And you go down the 3rd level of this report. There's only one task on this, but we can see exactly what stage or what part of that job took longer than expected, or did we not? How much money we made, or dollars we made on that particular activity. So when you go into any of these numbers, it will show you who worked on them, when, and we can go and ask Yasmin, hey Yasmin, great job on the 2021 annual accounts. I'm going to go and ask this person, did we invoice this? Where is my invoice? Yeah, hey, Billy, did we invoice Spice and Lice for their 2020 annual accounts? Great question. So yeah, much easier. There's a lot of other cool things this report does, including average charge rate. And for those of you using link reporting, if you haven't already, click your show more button and have a look at the add and remove fields option. You'll find that we break out direct cost and overhead cost. There's an estimated margin, budget. There's a bunch of other fields that you'll find available. So yeah, enjoy that.
Yeah, what Reubs has just done there is replicated the report he's built in XPM by having the client and then down to the job. The default when you jump in here is by job info. And the reason for that is because there could be, at the moment, there could be jobs hidden within the client that you can't see with a big write-off on. And if you run it by the standard groupings being job info, and you sort the report by average charge rate or by write-offs or whatever it is, you're going to get that raw level of the jobs.
Yeah, this would be the most detailed way to run this because it's job to job. So you're not going to get poor performing jobs hidden in high performing clients, maybe.
Yeah, that's right.
So, this would be like the most detailed way, but it really depends what you're after. If maybe our question is more around partner pricing, or we want to look at this for a particular partner or job manager, we would add some filters in there to just shrink this down. As you can see, when you run this for a whole year, or if you're running it month to month, this report can be quite big. So yeah, it helps to have fewer, smaller reports, I find.
It's a good idea to run it every month. You want to be running that, and even schedule it. Have a scheduled report that comes through as a PDF each month that goes, look, sorted from high to low on average charge rate or write-offs, and it's a really good way to look and go, cool, huge write-off on that client. Let's go talk to the job manager, see what happened.
So I'll do this for Ricky, imagining I'm Ricky. Ricky's interested in profit on his jobs, maybe per month. So that might be one focus. Or he might be more interested in average charge rate. He might have an idea in mind that he wants to achieve there, but we can schedule that for him and call it completed jobs, or last month's completed jobs for Ricky. Send that to Ricky at probably the second of the month would be a good date and time, every month as a PDF or CSV, Excel, whatever. That way, yeah, Ricky can just get that information and he can go and dive deeper. Yeah, so information comes to him. That was our link reporting example of profit to date. Cool.
So a quick question there from Rob that's relevant to what we're just looking at was, can you tell the staff member who worked on the job? Answers yes. All the values you can see there, click on it and it drills you down to a transaction summary.
Correct. Yeah. The thing about XPM is that there's multiple staff members who work on jobs, and it stores that information as a string. That's annoying for reporting purposes because you just got a big long block of text. Yeah. So that's what you want to, like I did, drill into the number, find out who worked on it, because there will be multiple names there.
Yeah, do you want to drill into one of the billable values, just maybe that?
Yeah, I did drill into this time, but yeah, drill into billable value, any value, you will get a full breakdown of all of those values, how that's arrived at. So here, this is a multiple person report. These are all the Rickies. Ricky put an hour and 40, total billable value 358. Yeah. Yeah. Those of you using it reporting, I'll leave you to explore that later. Cool. Profit to date. Now, we can't do the same thing with profit to date. Why? Because there's more invoicing to come. There's more time and costs to be incurred, and our profit equation is incomplete. So if we are going to use the word profit, would be more accurate to use the words profit to date on a job that is in progress. There are 5 other elements that you need to know to interpret profit to date, whether that's good or bad. With profit, we can tell using the margin or an idea. Is that positive? Is it negative? Is that margin acceptable or not? And we can rely on that. With profit to date, that's not the case. There are other things we need to know. One of them is remaining time. So I can make an assessment of how much more work is there to be done. What is the invoice value remaining? So if I'm 6 months into a 12-month engagement, I'm invoicing monthly, I can get an appreciation of how much further invoicing is to be done. We need to know the remaining budget. That's the expected invoice value versus the amount of effort. So some of this remaining time, remaining budget is the dollar value of effort that we would expect to be incurring. We need to know the uninvoiced value of WIP. That is pretty self-explanatory. What are we likely to be invoicing in the future? And how does that relate to our budget? And then finally, are there any write-ons or write-offs already recognized? We might have incurred quite a bit of time, but if we've already written it off, we might as well be at square one. So you kind of need to know that too. Now, here's an amazing example for you. And we'll look at this in link reporting. I should say, don't bother doing this in XPM. XPM just doesn't have the depth of information required to reliably show you how your jobs are performing on a profit basis to date. Yeah, it doesn't have enough. So here's an example. Here's what we need to know, and then I'll show you how we get it. So this is a job A with a budget of $4,000. We have incurred total costs, that direct cost time of $50, billable value of 200. We've invoiced 1,000, so that's like a deposit. The remaining invoice value is $3,000, being the difference between what we're going to be invoicing and what we've invoiced them so far. The remaining budget is just short of $4,000. That's the billable value. That's our dollar budget. 20 hours to go. No write-ons or write-offs recognized. Our WIP is negative $800. Our profit to date is $950. Is that good or is that bad? Who can say? Is profit to date the best measure of how this job is performing? I think it's certainly a measure, but we can't just look at that number on its own without also interpreting these numbers here. We need to know all these other elements. So let's look at how this job progresses. Here we go. Same job, $4,000 budget. We've put in more time this time, another 8 hours. Total cost has gone up to 1,000. Billable value is $3,000. We should be roughly 75% of the way through the job, hopefully. We haven't actually, well, that shouldn't be right, but we've gone back in time. We haven't done an invoice in this scenario, so there's no deposit taken in the first place. So our remaining invoice value is $4,000 because we haven't done any yet. The remaining budget's $1,000, 12 hours to go. We have recognized some write-offs already on the time we have incurred. The WIP balance is $2,500, and my profit to date is negative $1,000. Is this job going badly? Well, I don't think so. Maybe not great, but not terribly. Certainly not reflective of a negative $1,000 loss incurred so far. So in order to interpret that negative $1,000 loss or loss to date, we kind of need to look at some of these other figures as well. Let's see how this goes a bit further. We progress along this job, incur a bit more time, a bit more billable value. We've actually gone over the budget here. That's why our remaining budget is negative. We've done an invoice of $1,000, got $3,000 yet to invoice. There's not much time left to go, which is good because we're over budget. We've recognized some write-offs. Our WIP balance is quite high, $3,000, but the chance of me being able to invoice that is also quite high because I've got quite a lot of remaining invoice value left. So although I'm at a negative $800 loss to date, being my invoice value less the total cost incurred to date, this job is actually pretty much on track. So you can see how that profit to date doesn't really reflect how that job is performing without knowing all those other things. Ooh. This job progresses a bit further, a little bit more time added, another 6 hours. Costs have gone up, billable values increased by another 1,000. We've invoiced an additional $2,500. We've got $500 yet to invoice. Our remaining budget is negative. We're well over on this job in both time and dollars. No change to the write-offs recognized. Our WIP balance is $2,000, but the chance of me being able to invoice that is pretty slim. I can get away with another $500, but that's it. So my profit to date is $1,500. Is this job going well? Well, I would say not as well as it was previously because it's still going. Yep. So even though that's a big jump, it is very misleading looking at profit to date alone. Let's look at now this job is finished. So $4,000 total cost to date, no further time to be incurred, 2.2. Billable value of effort 6. We've invoiced 4, which was our budget. Nothing further to be invoiced. Our remaining budget is we're $2,000 over, 8 hours over in time. We had to write off $2,000 because our WIP has to become 0. We had also already recognized 500, and our profit to date on this job was $1,800. That is my money. That is my profit on that job. So I can reliably say that's how that job performed. Now, let's look at that in link reporting. Cool. So that is in the open job report here. I'm going to run this for a particular client. For those of you playing along at home, just click run. Cool. What we're looking at here is probably the biggest, most complex of all of our reports because it involves so many other elements of XPM, as you can see from tasks and quotes and disbursements and invoices and WIP and everything else all together. So here are all the jobs that are currently open for this client. We have, what do we want to do left to right? Here's a good example, $4,000 budget, remaining time. So what I'm looking at, I guess, is my profit to date, $2,377. Is that good or bad? My margin is on track, 67%, but in order to really understand if I can keep that or if I'm likely to be able to keep that, I need to be looking at where I'm at in relation to my remaining budget. So my remaining, where's my remaining budget? Over here. So we are over budget, but do I have much more time to go? Well, we're over time, so it's hard to say. Let's go a bit deeper. What needs to be done? Well, in here, we can also have little green ticks that will show you if things are finished. They appear over here if you turn it on under add or remove fields in, what's the field called, Will?
It's days
Last
till
timesheet.
due, but none of those tasks have been completed. So once a task is completed in XPM, that due
over
date
here. Yep.
will
So
disappear.
that's an
or
important question. Is it done? Like, I don't care if it's over time, but is it finished? Awesome. Or maybe I do care, but I don't care as much if it's at least finished. What other things are yet to be done, and how much remaining time do we have on them? That's an important element to consider. How much of this profit is likely to be mine? Can I get away with invoicing this WIP? Let's have a look. So the budget was 4, I've invoiced 3.5. I can invoice another $500. So yes, the chance of me being able to invoice that is high, but not if we keep incurring time on this job. And that's all changing by the minute because people are working on it right now. So I wish it was an easy, green is good, red is bad, but profit to date is not quite that simple. We need to consider a lot more than that to really rely on it.
The best field, probably, if you're going to pick one, from my perspective, is budget remaining.
Fantastic opinion there, Will. Let's have a look at that.
Okay, sorry.
Okay, when do we use profit as a measure of success? Profit is good for completed jobs. Profit is not great, but still useful for open jobs. Profit to date. What can we use instead? Remaining budget. That's probably the easiest option to looking at open jobs, saying, is this job going well or is it not? I'm looking at my billable value of effort incurred against what I'm expecting to invoice here, and I'm going, cool, that is negative. And you'd sort this remaining budget, schedule this to go by job manager, and send that to their inbox every Monday. That would be one way for your job managers to identify jobs that are approaching or exceeding their budget. And something a lot of our link reporting customers do. So if your remaining budget is option 1, remaining time is the next best bit, self-explanatory. And then as a bare minimum, the WIP balance can be a good indicator on how a job is performing. As a rule, you don't want it too high. Negative is good because it means we've been paid already. Yeah, so as a last case scenario, WIP balance can be an indicator of how a job is performing.
Reubs, can I explain how budget gets into the system?
Yeah, absolutely.
Cool. Okay. So, gee, just look at link reporting there. That's good.
Okay, cool.
Oh yeah. So that budget field in what we're seeing in link reporting there.
This one here.
Yeah, $4,000. Yeah. So how that's arrived at is you can either quote that. There's 2 options. You can quote the job. So in XPM, you can raise a quote, accept the quote, and then what link reporting will do is look at the quote and the quoted values on each of those tasks and disbursements.
Yeah.
Now that's really good for engineers, architects, and everyone that uses quotes. Use more that type of use, or more Workflow Max type world. But for accounting practices, it's pretty much near impossible to go through and quote 1,000 or 2,000 jobs
every year.
What we do instead is we can put the budget in the budget field there. That field is pretty useless in XPM, but link reporting loves that value. What we do with that $4,000 is we take that value and we apportion it first to the costs you have on the job. That's regardless of whether it's an estimated or an actual. That's the value of putting in your estimated costs for your disbursements, like your subcontractors. So that $4,000 first gets allocated to the disbursements, and what's remaining is going to be apportioned over all of your tasks relative to the estimated times on those tasks and the default billable rates on those tasks. So if annual accounts has a higher default billable value than GST, it's going to get a higher apportionment of that budget relative to the hours. So essentially all you need to worry about is popping in your budget there, and then link reporting will automatically allocate the budget really nicely across everything on your job.
That's it, man.
Cool piece of code, eh?
Very good. Good way to quickly achieve a good enough result, I think. Way quicker than adding estimated times to every one of your tasks in a job. Yeah, so that's why I think it is my favorite. Awesome. Wrapping this up, we're just coming up to the end of our workshop here today. What is a good profit margin? For years and years, we've talked about the old rule of 3, which is for every dollar a billable team member earns me, a dollar is for the direct cost for paying that person, a dollar is for overheads, and a dollar is for me, the practice owner or the owners. Cool. We've all heard that. That is across all of our team members' billable time and their implied billable rate. There's also time that they do that isn't on customers, that is often not measured or should definitely be measured. So this is the rule of 4, if you like, when we're looking at billable rates. You can look at someone's billable rate. Maybe we'll run a different session on it, but basically if we look at what we pay somebody, multiply that by 4, that's a good indicator. Or we look at that calculator, multiplying that number by 4 is a pretty good indicator around what their billable rate could be, mainly for a billable team member. who is, say, 75% productive. It doesn't work so well for management, partners, administrators, but for billable on the tools types, multiplying that by 4, $1,660, $170 would be a ballpark figure for a billable rate for that person. That's kind of the rule of 4. But when we're talking profit, we're only focused on this element, and 67% is the implied acceptable profit margin on that gross profit margin. So if you're looking in your link reporting, or you're using that report we built in XPM, when you're looking at profit margin to date, that's kind of the number you want to be seeing in that vicinity. Just like for our inventory-based clients, not our clients, your clients, but when you're dealing with bigger, client groups, perhaps higher volume, lower value type transactions, like our accounting franchise brothers and sisters, you can accept a lower margin if you're doing a lot of them. So same rules apply to what you would have in a warehouse type environment. So that's good. If you're doing more than that, even better. If you have your overhead rates apportioned, that expectation needs to shift for everyone who uses your link reporting or XPM, because that will show you your net profit on that job. So that would be more in the range of 33%. Anything to add to that, Will?
No, looks good, man.
Cool. So just as an idea, what is good? 67% and 33% if you're going to have overhead rates apportioned. That wraps up our workshop. If we haven't talked about enough already, link reporting. You can just go to linkreporting.com, start your trial. We sync it up overnight, and then tomorrow you guys will get a login and you'll be able to run these reports for yourself with your number. Everyone on this webinar can use that through to the end of September. So that's 57 days away. We are that generous. Sweet. So hit me up, and if I recognize your name, then end of September, you're welcome to use this for free.
What you're looking at there is a team performance report. That's a really cool report that shows all of your team productivity, billable amounts, write-offs, revenue, ROI, average hourly rates, all for drill downs and to see which jobs took the write-offs. It's really, really powerful. Yeah.
So that's not the focus of today, but that's one of our more popular reports, definitely. We did mention it a couple of times. I know a lot of people on this call have already got one, but if you haven't, purchase this book. It's available in ebook and audiobook, and you can get that from linkedpractice.com, and on our events page, on our book page, you can go and purchase that. $45 plus shipping. Hard copy. Awesome. Any questions, Will, that we didn't cover?
Yeah, there are a few. There's always a really curly question each webinar, and probably one that we haven't considered too much in the past. Nick has asked, is the admin wages included in overheads?
I get asked that quite a bit, and no.
No. Cool. And what's the reason for
that?
Yeah,
correct. We also apply a cost to our administrators, and they should also be doing a timesheet for us. So we're already counting their costs in their timesheet.
Cool. There we go. I knew Reubs would have an answer. So when you look at your team performance report, because they're doing timesheets, we're already going to see the value of their cost in that report. So our overall practice ROI and costings will include their time, because we do want our administrators doing timesheets. Otherwise, we're overinflating our profitability, our productivity of the practice. Yeah.
So ideally, we kind of work in a world where all people will do a timesheet, and that includes partners. I should have mentioned at the beginning. I see it from time to time. Partners don't do any timesheet at all. If you're one of those partners, do your timesheet. But if you really aren't going to, at least do your client time, because without it, none of this stuff works.
What is also a good idea for partners that don't like doing timesheets is you could get one of the administrators to review your calendar and go through at the end of the week and go, cool, these are the appointments, and then they can just make the rest of the time up. But getting in your full week is really valuable for your overall practice reporting. Otherwise,
it really depends on the output you want, I suppose. Yeah, it's benefit and cost, I suppose. So if you want to know what your practice productivity is, you're a big part of that. Another
really good question here from Kanina, which was actually covered really in really deep detail on our webinars page. I might get you to jump to that, Reubs. Is in link reporting, can you stop accumulating the cost of the set number of hours? So if someone works more than 40 hours, say 50 hours, they're on a fixed salary, do the costs start adding after 40 hours? And if so, why not? We cover this, like literally half of the webinar is on that exact question.
Here we go. Yeah. So there's a whole, that's a really, there's no
KPI measuring team performance. Yeah.
That's the one you want to watch.
Really, we cover, that's basically the webinar, is why we don't fix the cost of someone's salary and the impact of that. So rather than giving you the full half an hour webinar now, can you probably check that one out?
It's only half an hour. Yeah. So
it's in detail.
It's a valuable half an hour if that's your question. Yeah.
Cool. Now, Rod asked, how does this work with Practice Ignition? So basically, Practice Ignition deploys your engagements to XPM, and you do all your work in XPM. Link reporting is just reviewing mainly the WIP data. We use 9 data tables, but the WIP is the sort of the bulk of what we do. We take the WIP data and we supplement it with the other tables, provide these reports. Now, I think your question came around about when we're looking at budgets. So when Practice Ignition released their new proposal editor, around that time, I was jumping up and down with Reubs. We're saying, hey, can you please, when you push the job to XPM, can you include the budget to be the value of that engagement? And I believe they have done that. So when the job comes through from Practice Ignition, it populates the budget. So as long as that budget field's in there, it's going to allocate across all of the disbursements and the tasks. So it works really nicely with it. So
another way that PI helps actually is with your Xero subscriptions. Practice Ignition proposal when deploying a job to XPM can apply more than one job template. So you know how I was adding that estimated subscription into an XPM job. You don't have to do that if you're using Practice Ignition, because that'll be a line in your services saying this plan, you're on this plan. And you can link that to the job template that uses that plan. So yeah, if you want to have a look at that, or maybe hit me up after this via email or chat, and yeah, I'll show you where that is if you haven't found it.
Cool. And the last question from Rod is, when do we get the recording? I suppose as soon as
tomorrow morning.
Tomorrow morning.
Tomorrow morning, yeah, I'll send it out along with that base rate calculator, overhead rate calculator piece. One thing I didn't touch on, which is how do we know if all of our invoices are in our XPM? That's the big one. I think that'll be about it. I'll see what else pops up, but yep, those are kind of the 3 big things that came out of today.
Yeah. And for our last webinar that we did 2 weeks ago, Reubs and I were saying that we might have to run off because we both had babies overdue when we did the webinar. We both had our babies. So we both got baby boys that came 2 days of, no, we're not even 2 days apart. We're 1 day and 21 hours apart. We've had baby boys.
Yep.
So, so you can get, we can make our next webinars. We won't have to run off halfway through one.
Those of you following along at home, that's our life update. But hopefully you found all of this worthwhile. Yeah, we run this XPM workshop once a month, and Will runs one more accounting industry focused, less XPM-y, also once a month, but by every 2 weeks basically. So we'll be in touch around what the next topic is. Yeah, when we know.
Yeah. Awesome. All right, well, thanks everyone for making the time to come along and hang out.
Yeah, it was great having you here. Great questions.
Sweet. We'll see you in a couple of weeks.
Thanks, team. See ya.
Cheers.